Hey everybody, this is Ryan Mallory, and what a wild and crazy week in the stock market. In all the years that I've been doing, I've never really seen a stock market crash that quick, that fast, but it's all good because you've managed the risk. It doesn't matter what kind of market conditions you have, you can continue to be profitable in the stock market no matter what. So in this video, I want to look at the S&P 500, the other indices, also look at some of the big players in the stock market like Apple, Microsoft, and a host of others, and go through them and look for some ideal trading spots that maybe you could start targeting for some long-term positions or some decent swing trade positions as well. So first up, the S&P 500. As you can see, going back to the 2016 lows, this is a weekly chart of the S&P 500. You have this beautiful trend line. Now, coming into this past week, you would have thought, no way this is ever going to be in play anytime soon. But it is now. It is very much in play. And another sell-off or anything similar to it, like we had last week, well, this is going to get tested with just in a matter of few days if that's the case. Because here you have a huge support level at 2608. If that level gets tested, that's a good place to start really getting interested and more aggressive in the buy area with some long positions. Using that same chart but on a daily perspective, you can see the S&P 500 is just kind of floating out here in no man's land. And maybe there's a little bit of support here at the lows from August. Maybe that wants to hold. I'm not so sure though. And it's not a really well-defined support level, so that could easily break. So it seems more likely that there's some downside left in this market, and the ideal place to load up on the long positions would probably be this support level here. Now there's no guarantee that that support level in that rising trend line is going to hold. So if it doesn't, then you have to start targeting even further out support levels and trend lines. You got one going all the way back to 2015. That's where you start getting into, okay, maybe the 2400s would be the likely landing spot. If things really get bad, then you need to target these lows from December of 2018. I'm not saying we're going to get there, but it's good to know your numbers, because going into this week, who knew that we'd be sitting where we're at right now? Who knew that the market would have declined over 10% in 1 week? 15% off the highs. That is massive, people. Now let's look at the Qs. It's the Nasdaq 100. This index is actually a lot more healthy than the S&P 500, and even more healthier than the Dow Jones as well. The trend line off of the June lows of last year is actually still in play. That can't be said for the others, but it is here for the Nasdaq. It's holding. It bounced on Friday. It's actually in the green at the close. It had this monster rally in the last 14 minutes of trading. So a little bit Banana Republic style, but I'm not going to argue with it. I can't do nothing about that. It is what it is. You have to trade it accordingly. I'm still 100% cash. I'm not going to get in long ahead of the weekend with the coronavirus and everything that's going on. It's hard to say how the market's going to respond. But for now, from a technical standpoint, this rally that we saw late yesterday and how it held the June lows, that was a positive sign for the technology sector and for the Nasdaq as a whole. Let's look at some individual sectors here, because the energy sector is absolute trash right now. At some point, it's going to make for an unbelievable buy. Maybe it's sooner rather than later. Maybe it still needs to go all the way down and touch these 2016 lows, which would just be amazing. I wouldn't even know what to say if we actually got down that far. However, this is a massive topping pattern. I mean, this is distribution going on for like more than 3 years, and it's finally broken through it. And once again, we got a sector that's in no man's land. There's really nowhere for it to go except either touch the 2016 lows or create its own new support level. Technology, like the Nasdaq, has found some support here off of the rising trend line off of the June lows, and it's trying to hold. So that's the key area to watch going forward. Similar to technology, discretionary. June lows is still holding that trend line. It's not the exact price level, it's a trend line. It's different. It has a slight angle to it. It's holding though. Now you take something like financials. It actually broke a key support level on Friday, and it still hasn't rebounded back above it yet, so that's a concern for me. I would probably be staying away from some of these financial names. Let's get into some individual names now, because Apple is starting to get a little bit more appealing here. Take a look at the chart going all the way back to 2019 lows. You have a massive trend line here. It hasn't touched it yet. Could it get all the way down to 237, 238 and give me an opportunity to get long? I'm not sure, but I sure hope so. I would love to be able to get long at that. I mean, the bounce on late Friday, it kind of messed that up a little bit. However, it's still floating out there in no man's land. I do think that this is a possibility to be watching going into next week. Take a look at the weekly chart of Facebook. This is really the one that I'm most interested in, because it has a trend line that goes all the way back to its inception pretty much, and all the way back into the 2012s. and it has been holding ever since. It's getting very close to touching it again. If you can get it tested of around 178 or so, that's going to be a good area to get long on, I think. Then, of course, you have Netflix. Looking at it on the weekly chart, it doesn't look like it's taken on that much damage, and compared to everybody else, it hasn't. It's actually had a number of days where it finished higher. It has this basing pattern near its all-time highs. It looks like it wants to break out above the 385 area. It does that. It could see 420 again in the very near future. Check out this Google chart. Man, this thing has pulled back beautifully back to the 1305 area. That's going to continue to be the support level to watch going forward. Tested it on Friday. It held. It actually broke up below it at one point, but it recovered into the close, and the closing price is so much more important than the intraday price. MSFT, one of the best stocks of 2020, and it's still holding its long-term trend line off of the December lows. It's an ugly candle after yesterday, but it shows promise that it might be ready to bounce now and climb closer to the 200 level again. However, if that's not the case and it decides to reverse on Monday or sometime next week, start looking at this 145 level to get long at. It's a massive support level. I really like the way it has held in the past. That would be the ideal target for getting long on the stock. And Goldman Sachs is intriguing. I don't know. I'm not really crazy about buying the banks right now, particularly when you're looking at the action with the 10-year yield. However, this huge support level, and it's not even a long-term support level, it's a short-term support level. It goes back to August of last year. It's held really well. And so it bounced off of it yesterday almost to the penny. There's a lot of upside here. If things do reverse, you could easily see this thing move back towards the 220s, 230s in very short time. Finally, I'll wrap it up with Tesla because I know a lot of you guys like Tesla and you want to know about it. Rally off of the October lows. That's my first area that I want to get long at or consider getting long at. I don't want to get long right now. Yes, it's holding the 50-day moving average, but there's not a history of it holding the 50-day moving average. So just one time, it might just be a flash in the pan and it doesn't really matter. However, if it can pull back to this 550 level, 560 level, that becomes a much more ideal area to get long. Best case scenario in terms of value or trying to buy it on the dip would be a pullback to this breakout level, this huge breakout level going back to December of last year. If it could go all the way back to 377, yes, it is possible. It is possible. I know people would just have a meltdown over me saying that, but it is possible. This stock more so than other stocks because of the run-up that it's had. It could have that easy pullback to 370, wipe out a lot of long positions, create a lot of panic selling, and get people to buy in at 377, 380. That would be an ideal price. That would be maybe a pie in the sky scenario. I don't know, but guys, if it happens, that would be a good place to get into. Listen, I'm not trying to dog your stocks at all here, whether you're an Apple, Microsoft, Tesla. I'm trying to give you honest evaluation of the stocks, where I think it might be going. Stock market going forward, this coronavirus, it may get a cure for it tomorrow and the market will go right back up. China's already starting to slow down the spread of it. That's a good sign, because if that happens in China, maybe we'll start seeing it happen in France and other countries, and it has yet to really take a foothold in the United States. If it doesn't get any worse, I think the market will improve. You have to follow the price action, okay? You've got to use stop losses. This week has been the perfect textbook example of why you always use stop losses. Yes, when the market's going up like it did in November and December and most of January and some of February, it feels like, why bother using a stop loss? The market just keeps going up. It always forgives you, but that's not always the case. You just saw this week what happens when you don't use stop losses. Stocks drop by 30, 40%, like what you saw in the cruise lines. It gets ugly. Perfect example of that is RCL, Royal Caribbean Cruises. I was just in it about a month ago and it was at 132. I'm out of it now. I got stopped out at like 132s. You can look at my past performance for the exact number. However, it's trading at $80. It was trading as low as $70 this week. So stop losses matter. They always matter. You always keep yourself in a position to where you can profit from the market when you use your stops. This has been a good week for me. I'm not upset about what we saw this week at all. I think it provides more opportunity for me and members of the trading block going forward. I was long coming into the week. We had the massive gap down. I took a lot of profits off the table because of stops being hit, but a lot of them were like remaining positions, like a third of a position or a half a position. I had some short positions that helped with some of those losses that I took, and some others that were actually, they finished or hit their original stop losses. But then on Tuesday, those positions started to increase in value. I covered those positions, not thinking that this market was probably going to go down another, 7-8% from what we saw on Monday and Tuesday. I was wrong on that. However, I'm happy with my short positions, their outcome. I was profitable. I managed the risk on them appropriately. And then I've just pretty much been on the sideline each night since then. So I've tried a couple of long positions as day trades. They didn't work. But hey, I'm still sitting at the top of my portfolio. And when you manage the risk, you can do the same as well.